And I'm going to take a look at gold. The picture is a bit uh, cautionary right now. Um, I know this is not what gold bugs want to hear. They want, like most analysts, they want to hear that gold is going to the moon any day now. That's great for getting subscriptions, but it's not so good for making people money, especially when gold is in a downtrend. Um, so we got to be realistic right now. Here's the problem. The last three times gold tried to get above the 200-day moving average wasn't long before there was an attack that drove it back down. So the 200-day moving average was not able to turn back up. We're getting selling this evening that is taking gold back below the 200-day moving average again. The bigger problem, though, is that this first daily cycle um, couldn't it couldn't even break through this resistance, much less recover the previous intermediate high. And when assets are in a bull market, the first daily cycle will very often recover all of the previous intermediate decline. So, if you're a gold bull, what you really wanted to see was this first daily cycle come up here and at least test this intermediate high, at least get back up to 1900. Certainly you want to break through this peak right here, and it didn't do it. As a matter of fact, it's just like I said, we got a brief little move back above the 200-day moving average, and then it was followed by an attack, and then gold was driven down into its first daily cycle low. And now we're into the second daily cycle, and again we're getting mature. We're it's either 20 or 21 days into this daily cycle, and we haven't even recovered this high yet. Again, not a great sign. And again, I know this is not what gold bugs want to hear. This is not how you get people to subscribe to your newsletter, but I think it's more important to give people the truth here and not cause them to lose money. Telling people that gold is going to the moon any day now is great for getting people to subscribe to your newsletter, but if they then just turn around and lose money, you're not doing anybody any favors, including yourself. So I think we've got to be realistic here. This second daily cycle, the first daily cycle didn't really do what we wanted it to do, and the second daily cycle is not really doing what we want it to do. We really wanted to see this bust through this 200-day moving average, do it early in this first daily cycle, make a higher high, preferably do it early in the daily cycle. As I've said many times in the past, breakouts that occur early in a cycle tend to produce sustained moves. Breakouts that occur late in a cycle tend to not produce sustained moves. They tend to fail. And at this point, we haven't even got a breakout, and we're getting mature in this daily cycle. So you need to be cautious here. You need to have a tight trailing stop on any positions. I continue to think that we're probably in the declining phase of the 8-year cycle, and if you look at this with a longer term time horizon, this is good news, because you're going to get a chance to buy more silver at a cheaper price. And I prefer to buy just physical silver, take it off the market. The more people that take possession of silver, the harder it's going to be to manipulate once that 8-year cycle low is struck and is behind us. I would prefer to buy physical silver at $15 than at $30. I mean, it would be nice for silver to go to $30 over the next month or two, but the 8-year cycle low is still going to be ahead of us, and I don't really want to buy a bunch of silver 100% higher than I possibly could. I'm just going to make a lot more money if I can buy my silver at a cheaper price. So at this point, it doesn't really matter to me whether or not gold rallies here, and I guess in reality I would kind of prefer it doesn't, because I want to buy more physical silver and I want to buy it cheaper. So I would prefer that we just get on with the move down to the 8-year cycle low, and then give me a great buying opportunity, probably sometime next year, with silver at or below $20. I'm just going to be able to buy a lot more ounces, and in the long run, I'm going to make a lot more money. So in the meantime, there are other places to make money, and I've never really understood this, but gold bugs tend to be very emotional investors, and they tend to believe that the only valid asset class to invest in is precious metals. And so when metals are under attack, or they're in, like now, I think the declining phase of the 8-year cycle, they, for whatever reason, they insist on fighting with probably the second most manipulated market on the planet, instead of making money in other areas. And energy has been one of them. We've been long since way back here, and we're starting to take some profits because we're starting to get into some resistance zones that could give us a move down into a daily cycle low. This, at this point here, it was still early in the daily cycle, and like I said, breakouts that occur early tend to produce sustained moves. That's what's happened. But now we're getting late in the daily cycle, and it's we're getting into a period where it's likely that one of these resistance zones is going to turn oil back down and give us a daily cycle low, and then that's the point at which you're going to be set up to add back into your positions. But it's too late now to be adding, or just now buying energy. You should have been buying back down here when we were buying. So while the gold bugs have been fighting and gnashing their teeth because gold won't do what they want to do, other traders we've seen opportunities in other areas to make money, energy being one of them. And then stocks is another. And stocks are even better, because we're only about 15 days into a new intermediate cycle. So people got really bearish, and I'm not sure why this is, but gold traders tend to believe, and I suppose gold analysts are always telling them that the stock market is going to crash 50 or 60% any day now, and at some point it will, but we're just not done with the bull market yet. I think we have to have a big parabolic move first, and then we get our crash. So we were looking for a bottom here, and this is an intermediate cycle low. It's still very early in a new intermediate cycle. It's only Tuesday of week 3. Usually these intermediate cycles will rally 15 to 20 days before topping. I think this one here rallied like 25 weeks before topping. Sorry, I meant weeks, not days. So it's very early in this intermediate cycle. Tried to get people in right back in here when it became clear that the intermediate cycle low had been struck, and that we were now moving into the advancing phase of a new intermediate cycle. So another area where you can make money while you wait for metals to finish what they have to do, and wait for that perfect buying opportunity to add to your physical silver stash in preparation for the advancing phase of the next 8-year cycle. Gold and silver, you're just going to have to take a longer term view on your investments. For shorter term, more immediate trading opportunities, they are in energy and in stocks. And in both of these areas, you're not going to get manipulation to the downside. In the stock market, the manipulation is always going to be, if there is any, is going to be to the upside. So the Fed is going to work in your favor, and we've got shortages in energy brewing, so the fundamentals are working massively in your favor in energy. So for trading in the weekly and even monthly time horizon, you're just going to have an easier time making money in stocks and in energy. In metals, you've got, I know, gold bugs want to believe the analysts telling them that gold is going to the moon any day now, but the odds are probably not good that that's going to happen yet. Gold probably has to finish that move into its 8-year cycle low. And with gold potentially losing the 200-day moving average tomorrow, of course we'll have to see how this closes. It could completely reverse by the close tomorrow, but if it closes below the 200-day moving average, and especially if it were to break this trend line, that would potentially signal that the second daily cycle has rolled over and is now in the declining phase of this second daily cycle, and that would not be a particularly bullish development if the second daily cycle can't make a higher high. In order to get bullish on gold, we need an intermediate cycle to make a higher high, and right now we're not even close. This intermediate cycle was not able to make up a higher high above this one, and so far gold has not been even close to making a higher high above this intermediate cycle low. So while I could sell a lot of subscriptions by telling people that gold is going to the moon, I really think it would be a disservice, and you would probably lose money. So I think you need to face reality right now, and unless this reverses really quickly and gets up above this triple resistance zone here, then I think you're better to be cautious and have a tight stop on metal positions and not take a risk of getting dragged down into an intermediate decline that would probably break below this support zone if this second daily cycle is rolling over.